Hello YouTube and welcome to my August portfolio update. Top 10, it's not really changed there from last month. Rolls-Royce come up a little bit, Meta Platforms went down a little bit. Barclays that were in there I brought right at the beginning of August has been sold out and replaced with HSBC. So that's really that, and I'll talk about that as we go through. So last month, started off okay, went up a little bit and then there was a tiny little dip. So I invested about 200 quid. And that stayed quite nice and flat. So it went up a little bit, stayed nice and flat then. Then there's another dip, and then I put another £200 in, and then it climbed up nicely. Finished on a good sort of high. And then obviously I sold out Barclays and bought HSBC. So that's sort of how the portfolio's performed this month. Going through the holdings so you can see how they're doing. And we'll talk about a couple as we go through. So I just want to talk about 3M. So 3M showed a bit of recovery. They've just settled their lawsuits for the earplugs at 5.5 billion, which was less than they thought they would. So their estimate was between 10 and 15 billion. So they settled for at 5.5, which is less than that estimate, which is good news. So stocks had a little bit of recovery, and the dividend looks safe again for now. So I'm going to be taking this out of the hold to sell pie and putting it back into a dividend pie, I think, and just put a little bit of money in it. Yeah, so that's that little bit of news. Oil's doing really well at the moment. It's up quite a bit this month. Looking on from month scale, it's up quite a bit, which is really good. Cat again still throwing very strong results, or strong results, wrong word, strong performance. Sitting at around $280. Did dip down a little bit, went back up again. That's really good. Like I say, oil's doing really well. But like I said in the past, I want to reduce my oil holdings. Say Chevron, I think I'm going to sell this one. I think hopefully it'll get to about $170. Then I'll sell it. Just reduce my oil portfolio. It's doing okay. I was glad to say land not doing so great. HSBC. So let's a quick talk about this one. So back in June, I think it was, I had these in my normal trading account on 212. So, which is what first thing I opened when I sort of downloaded the app. And that was during the beginning of the pandemic and the lockdowns and stuff. And I put £1,000 in there, and I brought a number of companies that had suffered a share price dip because of the pandemic. And HSP was one of them. So basically, when they started to recover or got back to a reasonable share price, I then sold them. And HSBC was the only one that hadn't sold because I had set myself a target of £6 a share, and it kept getting very close, but then just kept dipping down. So I'd sort of basically double my money on everything else apart from this one. So I held on to it, and then it went up at the beginning of the year to around £6.50, somewhere around here, £6.50, yeah. And I was really busy at the time. Here somewhere, sorry, get the right point. Yeah, look, about £6.50. And I was really busy at the time and I missed it and it dipped back down again. So I thought, hold on to it. And now the dividend, they started paying dividends again. So I thought, well, actually, it's quite a good dividend I'm getting from what I've got. And I had 45 shares. So anyway, so I sold them out at the wrong time. Here somewhere. Yeah, beginning of June, at £6.02 I sold them out for. And then bugger me, did they go up again to £6.50. So, because I wanted to then rebuy them in this portfolio, but because they went up to more than what I'd sold them for, I didn't want to buy them back and then sort of have a loss, if you like. So I ended up buying Barclays around the 9th of August, because that was his ex-dividend date was the 10th of August. And then subsequently after that, ex-dividend went, they started to dip again, along with Barclays as well, but then they made a little bit of recovery. But Barclays did anyway here. So I was actually then in profit for Barclays. So I sold Barclays out. I should still get a dividend when that pays out, I think either this month or next, can't remember now off the top of my head. And I bought these. So I didn't put any extra cash in, it was all the cash that was already in there. So I ended up getting another share basically for free, which is worked out quite nicely. And yeah, they'll go into one of the dividend pies, and I'll add to those as I do everything else. So that was a little story for the month. Apart from that, portfolio's not doing too bad. Not too much movement in terms of profit and loss. Still roughly the same as last month in terms of red and green ones. Maybe up slightly. Reality income, that's another one to talk about. So that's taken quite a hammering at the moment, as in the share price is dropping. There's loads of people raving about it on YouTube as well, if you want to have a little search. So I'm not worried about it. I'm seeing this as an opportunity to buy it cheap, so I'm likely to stick a few extra quid in this one just to boost up my shareholdings, because it does pay a good dividend and I quite like it. Apart from that, Rolls Royce still on having a stellar ride, up to what, £2, £2.50, £2.20. So again, that's still on a good rise. It's still a good top earner for me. Again, pretty much nearly doubled my money on that. Oil's having an amazing time in a minute, so I am going to trim some of these oil stocks down, take advantage of that. Apart from that, that's pretty much everything. There is one more stock I want to talk about, and that's Vornado Reality Trust. So this one's been in my sell pile since sort of beginning of the year, really. I bought them at the same time as bought this one, because I wasn't sure which one was the best, and it turned out that one was, and this one wasn't. It's a pretty similar story to HSBC, actually. I was tempted to do it a few months ago, but it was choice between that and Citibank, and I chose Citibank. And again, Citibank hasn't done what I thought it would, and HSB did. So I bought, sort of moved HSBC to this portfolio. But anyway, back to this one. So they stopped paying dividend at the beginning of the year, and they've sort of turned things around, and it's had quite a good rise, as you can see. So I'm nearly at a break-even point. I'm only now down 56p, whereas I think at its worst I was down nearly £50, I think, or £35. So that was quite a lot. I'd lost sort of 50% of the value I had in there. So I've been cost averaging into it. The share price has made good recovery, and I think when it gets to like $26, maybe $27, I'll then sell these, because that's what I plan to do anyway, and then reinvest the money in the portfolio. And then that's that really. So even though my portfolio, because this now recording this sort of first week of September, this number's slightly different to what it was ended on the 31st of the month. So let's go along and take a look at my dividends for August. So in August, my first monthly payer, AGNC, that's paying me £1.20. Again, I'll sort of boost that up to £1 at the beginning of the year, because that's one of my targets, along with several other ones I'm trying to do this year to get to £1, to help me get to that 5% dividend yield. Apple paid out 14p, so pretty flat for that. AT&T is another one of my good ones, well, another one of my favourite ones. The share price is really low, but the dividends are remaining stable, so they're a good cheap buy at the moment. I know they've got some things in the news, in the media, about some of the cabling they've got with lead sheathing on it, and they've got to replace it and stuff like that. So that's not helping the share price at the moment, because that could be very costly. But I think at the moment there's still a bargain to buy. First, my banks that paid me out £1.29, which is good. BATS, British American Tobacco. It's another one I should have sold out last October, but I was just didn't. Now I regret it. But yeah, tobacco. I want to exit out of tobacco just because of what it is. Really, it pays because pay good dividends. So that's the only reason. Just morally, really, the dividend's actually really, really good. Caterpillar paid out 54 pence, so I'm okay with that. And Citigroup also paid out 54 pence. So if you sort of compare month on month or dividend on dividend payment, it's pretty equal in Caterpillar, but the share price is majorly different. That's okay. General Dynamics, first of all, War Machines, that paid me out 57 pence, which I'm quite happy with. And then Gladstone Land paid me out 14 pence. Again, not doing what I wanted to do. I think that's why I've made my mind up. I am going to cost average that to a profit and then sell it. Greencoat Wind, so this is one of my newer ones this year. That paid me out 73 pence. It's actually proved to be quite a good little choice in terms of dividend. The share price is doing okay as well. Horizon Technology Finance, that paid me out £1.11. So that's good. That's another increase from last month. Going up nicely. First Mill ETFs paid me out. So JP Morgan one bonds paid me out 52 pence, which is okay. And then JP Morgan and Chase Bank, so another bank one, paid me out 67 pence. Again, doing okay. I say doing okay, but I was expecting dividends I would have expected the dividends to go up on all the bankings due to the higher interest rates. They are making a bit more money. Haven't seen that filter through yet, but still time. Lowe's paid me out 43 pence. LTC Properties, this is another one I'm boosting to £1. That paid me out 63 pence. And the other one I'm boosting to £1, which is Main Street Capital, that paid me out 45 pence. Okay, doing okay. National Grid paid me out £2.15, so that's the last payment I'm going to get, last dividend payment I'll get for that for this year. This is like one of my late father's favourite companies, and it's got sentimental value, so I like it too as well. And it is a good investment. It's steady, stable, it's good. Nucor, this is probably one of the best of my growth dividend stocks, and its dividends coming good as well. So really happy with that. Again, it's at a really high price, so I'm thinking about taking some of that profit. I'm at the moment. I'm at a point where I'm sort of thinking about how I'm going to rejig the portfolio for next year, going into next year, and then think more further forward for the final year of this sort of experiment. So I might trim some of that to invest in other ones. PIMCO bonds, there's 2 ETFs of that, both paid me out this month again. So I had 60 pence, 68 pence. Again, I'm going to sell that one, I think, if I cost average it back into a profit, because it's the dividends. They both pay roughly the same dividends, but the share price of that one is more volatile. So I think that's the one I'm going to sell out. Procter & Gamble paid me out 58 pence, which I'm really happy with. And Prospect Capital, this is the other one I boosted to £1 a month at the beginning of the year. Paid me out £1.14, which is, again, nice steady returns I'm starting to see from some of these now. Reality Income, so we spoke about that just briefly before, and that paid me out 41 pence. This will be the next one I start boosting to £1 a month, taking advantage of the fact that the share price is quite low at the moment. Royal Bank of Canada, another banking one, paid me out 97 pence, so just shy of £1 on that. Stag Industries paid me out, this is my favourite one. Dividends good and the share price is good. It's my favourite stock. But again, that paid me out 33 pence this month, which is good. Really happy with that. Starbucks also paid out at 47 pence. So starting to see some good returns now. And Cisco paid me out 54 pence. And my risky debt buying, high dividend paying company, 24 monthly select, paid me out £1.08, which is happy with. And United Utilities Groups pay me out £1.93. So that's really good. That's the final dividend for the year on that as well. So not bad. Nearly £2.40 ish for the year. Not bad. And then we're into my ETFs, my Vanguard ETFs. So my UK government gilt, which is UK government bonds, pay me out 27 pence. And the US corporate bonds. This is the one where I bought the bloody UK pound one and the euro one purely by mistake because they had the same ticker symbol, and I'll do it in a rush. So I get dividends from both, but I count them as the same one because I'm accidentally bought it. I should have sold it straight away, but I didn't. It lost a little bit of value, so I'm just waiting for it to sort of break even, and then I'll sell out there and put it back into the right one. But only one of them. The other one pays out in the next couple of days, I think. Save only 5 pence from there, but still not bad. And then lastly, Whitestone paid me out 21 pence to give me a total for the month. So Dream 2 and 2 now paying interest on uninvested cash. So I've got a couple of £100 in there. So they started doing it a couple of months ago, and I didn't really know how to record it because it pays me interest on like the dividends that I get before I reinvest them, and any cash I've got just knocking about in there. So I don't have a lot, so I wouldn't use it as a savings account. But it is money that's going there that won't come out. So I need to record it, otherwise the figures will be squiffy when I invest it. I mean, it's only pounds and pence, but it could make a big difference coming into the 5 years. So what I decided to do was record it on here and then add it to dividends, because technically it's like a dividend to me, looking at it that way. So for the total for the month, I got £25.11. So again, just want to measure in. I had a couple of new bits on here. So this is the money I had from HSBC, so I know exactly how much money it was. And to make it easier to work out what I'm getting in interest per year, I added this in there as well. So I've got total interest there, and so I can have to do a really good like-for-like comparison. So I think I've had over nearly 400 quid worth of dividends, and the total interest I've had 230. So in terms of that, I'm still up, but I digress. So in August, £27.97 in interest. So the ISA, cash ISA, has beaten the dividends again this month because I only got 25. So that's a win for the ISA this month. So the ISA is doing really well this year due to the higher interest rates. So at the moment, cash seems to be king at the moment, but we'll see how the end of the year plays out. So, so I put in £403 into the ISA and the investment portfolio. So then looking at the numbers then, so my investment value is worth £9,743, and my ISA is worth 8,400. So there's about 1,300 sort of difference. So the investment account is still beating the ISA, but the ISA is coming back really, really strong this year. My dividend yield now is up to 4.44%, which is nice. So it's getting closer and closer. I should hit the 5% before the end of the year. One of my targets for the year. And I've had £174 so far this year in dividends, which is good. And my capital growth is sitting at, for this year, sitting at 12%, 12.5%, which is good because at one point that was a minus figure, and I'm £350 up in profit on capital growth. Which is good because I think I was about £350 down sort of May time, so it's a good recovery. So all in all, pretty pleased with this month. Having a look at the overall, so these are my dividends from the beginning. So you can see this is an exponential trend line, which should mimic what my dividends are doing, and they are sort of following that trend line quite nicely. So I've had a couple of months above and a couple of months below, but overall it's about 50-50, so I'm very happy with that. So I've got this chart here is now taking a bit of shape now. I've getting some data in. So this shows my dividends year on year. So this is my 21 dividend, this is my 22 dividend, and this is what I am 2023 dividend, which is already beating 22 dividends already. So that's good news. Okay, and then finally, I didn't look at the charts. Let's look at those charts, but let's look at the actual individual company ones. So this chart shows how much dividend each company's paid me. So sort of want to do a top 5. So BP still number 1, then AG and C is number 2, Shell is number 3, Prospect Capital is number 4, and Penny Group is number 5. So that's my top 5 dividend payers since I've started this portfolio. So not much change there. Month on month. So I need to average, to meet my dividend target, I need to average £26 a month. So the last 3 months I've actually averaged over 25, which is good, but I'm not at the 26 mark. So I really do need a strong finish to the year if I'm to make my dividend target. So that's going to be a really tough challenge, but we'll see how we go. So let's have a look at that in terms of predictor. So my little sheet I'm trying to build, I'm trying to model stuff, shows it's going to be 13 years, 12, 13 years before I've hit the 50k mark, which is not 5 years what I originally set my original target out as, but we've still got time to go. Be positive. So using my model, it predicted that I should get £312 in dividends this year, and I'm on course for it, so I'm over halfway. So but unfortunately we're more than halfway through the year, so like I said, I need a strong finish year to make that. My predicted capital growth for the year was just under £200, and I'm at £350, so I'm beating that, which is really good. And my estimated fund value would be just over 10,000, and I'm only about 400 quid behind that at the moment with 4 months to go. So it's a very strong possibility that I'll beat that. So the one that looks metrics is going to fail, miss target this year, it looks like to be my dividends. But all in all, not too bad. So there we go. That brings this to an end of this video. So if you like this video, please give it a thumbs up, because it really does help my channel out. Thanks for watching, guys. I'll see you next month. Cheers.